This is an Uncovered Japan company research report on One Career, ticker 4377. One Career runs a career data platform around Japan's new graduate job hunt. Its free service helps students navigate an opaque process, while employers pay for recruiting solutions built on the resulting data. This video follows the report's evidence on the business, the numbers, the strategic levers, valuation, and the risks that matter. The investment snapshot is unusually strong on operating quality. Revenue compounded at about 40% annually over the 4 years to fiscal 2025. Gross margin reached 85% and operating margin 28.1%. At the report's reference price, the forward price-earnings ratio was 17.8 times. That can look undemanding for this growth rate, but it also means the valuation depends on the growth engine continuing to work. The business model is simple in outline, but powerful in practice. Students use the free One Career service during a job hunt that can last months. They read and contribute reviews, selection process write-ups, and behavioral signals. One Career processes that activity and sells employers recruiting solutions, perception data, scout products, and consulting. The student side creates the asset, the employer side monetizes it. Its newer products extend the same idea into mid-career hiring through Plus and into recruiting workflow software through Cloud. The financial evidence starts with a remarkably consistent scaling record. Revenue rose from 1.95 billion yen in fiscal 2021 to 7.58 billion in fiscal 2025, a 4-year compound growth rate of 40.4%. Operating profit grew even faster, at roughly 50% annually. This is not a growth at any cost profile. Margins expanded as the company scaled, which is exactly what the economics of a data business should deliver. The balance sheet reinforces the quality of the model. One Career ended fiscal 2025 with 6.1 billion yen of cash, a 69.1% equity ratio, and effectively no interest-bearing debt. Contract liabilities, or customer prepayments, grew as well, helping create negative working capital. In plain English, customers fund part of the company's growth before revenue is recognized. Free cash flow reached 1.88 billion yen in fiscal 2025, giving management substantial flexibility to reinvest, return capital, or pursue alliances. The core moat is not a single website feature. It is the time-based data loop. Each student cohort adds reviews and behavioral information. That content attracts the next cohort organically, deepening the data set again. Employers can use the resulting data, recruiting planning, and candidate workflows, which raises switching costs once those processes are embedded. A competitor can copy a feature, but cannot instantly recreate several years of genuine, high-frequency job hunting activity. The important limitation is that the defended core sits in a new graduate market with a finite annual cohort. Management's growth equation has two inputs: more corporate accounts and higher revenue per account. The report's base case is calibrated to company guidance for fiscal 2026, then assumes those two drivers keep rising at a moderating pace. It reaches roughly 18 billion yen of revenue by fiscal 2028. Management's stated fiscal 2030 ambition is much larger: 35 billion yen of revenue and 10 billion yen of EBITDA. That ambition is coherent, but it requires more than the core business simply continuing as it is. The strategic question is whether One Career can turn a successful new graduate platform into a broader recurring revenue business. Cloud is the key swing factor. The recruiting planning function was free at the end of fiscal 2025, so monetization remains unproven. Plus is the mid-career extension intended to lengthen the customer relationship. Japan's labor shortage and recruiting digitalization are supportive, but recruiting budgets are cyclical. Generative AI is also two-sided. It can improve matching and workflow, while potentially challenging the authenticity and scarcity of review data. On valuation, the report separates the attractive-looking earnings multiple from the more demanding book multiple. The historical price-earnings ratio compressed from roughly 56 times in fiscal 2021 to around 30 times by fiscal 2025, with the forward multiple at 17.8 times on company guidance. For a grower, that looks reasonable, but price to book was 6.85 times, reflecting the company's roughly 30% return on equity. If growth disappoints, earnings and the multiple could both fall at once. The report's 3-year scenario range is a transparent framework, not a recommendation. Its author estimated bear case implies 1,869 yen, 9% below the reference price. The base case implies 4,624 yen, and the bull case, 7,506 yen. The range is asymmetric on those assumptions, but it rests on forecast earnings and valuation multiples that can prove wrong. A harsher slowdown could produce a result below the modeled bear case. The risks deserve equal weight. The new graduate market has a structural ceiling, and recruiting budgets can fall in a downturn. Cloud monetization may be delayed, while RPU or corporate account growth could slow. Governance is a genuine double edge. Founder CEO Naoki Miyashita controls about 56% of shares, providing long-term alignment but concentrating control and leaving a thin free float. Finally, a serious data breach, regulatory change, or erosion of review authenticity would directly threaten the central data asset. To conclude, OneCareer is an owner-led career data platform with rare operating quality, roughly 40% historical revenue growth, 85% gross margins, a debt-free balance sheet, and a data moat that deepens over time. The constructive case depends on accounts, ARPU, cloud monetization, and expansion beyond a capped core market. The counterweight is a demanding book multiple, thin small-cap liquidity, and founder control. Watch the company's account growth, ARPU, cloud progress, and margins. This is analysis for education, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.